You didn't get a 1,099. Does that mean you don't have to pay tax? Short answer, no. Shocking, right? Not getting a 1,099 doesn't erase the IRS's rules. The tax man expects you to report every dime of taxable income, whether a platform sent a form or not. Stay with me. I'm going to show you an audit-proof, step-by-step playbook for what to do in 2026 if that 1,099 never shows up. Hey, I'm host name. Welcome back to Tax Playbook. Today's one of those practical, slightly scary, but totally solvable topics, missing 1,099 seconds for your side hustle income. By the end of this video, you'll know exactly what records to collect, how to calculate estimated taxes without a third-party form, how to report the income safely on your return, and real examples of audit-ready documentation. Quick disclaimer before we dive in, this is educational only, not professional tax advice. Rules change, so confirm specifics with a licensed tax professional or the IRS for your situation. Now the best part, I'll give you a simple checklist you can start using today that keeps you audit ready with just 10 minutes a week. First, understand the rule. The Internal Revenue Code requires taxpayers to report all taxable income whether or not the payer issues a Form 1099 NEC, 1099 MISC, or 1099K. So even if PayPal, Venmo, Etsy, or a client didn't send you a form in early 2026 for 2025 activity, you still must report the gross income on your 2025 return filed in 2026. Sounds obvious, but people assume the form does the reporting for them. It doesn't. Here's where it gets interesting. The 1,099K thresholds have been a moving target. The IRS issued guidance planning a lower threshold, then later legislative action in 2025 changed reporting thresholds again. That means whether a platform sends a 1,099K for 2025 can depend on changing rules and platform policies. Bottom line, don't wait for a form. Your tax obligation is independent of receiving one. Now, if you didn't get a 1,099, step one is record keeping. This is the single thing that separates people who survive audits from those who panic. Start a contemporaneous ledger with date, payer, gross amount, and the purpose for every payment. Use a simple spreadsheet or a bookkeeping app. Every time money hits your bank or a processor, log it. Don't just rely on year-end summaries. Monthly reconciliation is your friend. Reconcile platform statements and bank deposits each month. Why monthly? Because mistakes and personal transfers hide in the noise. If you moved money from a personal PayPal balance to your bank, annotate it as a transfer, not income. If you got reimbursed for supplies, mark it as reimbursement and attach the receipt. Examples of what to keep include invoices with sequential numbers and dates, bank statements, year-end platform summaries, photos of sold items, platform messages confirming sales, contracts, and a contemporaneous mileage log if you drive for deliveries or gigs. Keep these things organized and linked to your ledger entries. Okay, you've got records. How do you turn those into the gross receipts number on Schedule C? Start with bank and payment processor statements. Pull every deposit you can reasonably tie to your side hustle and create a single column for gross receipts. In a second column, deduct personal transfers and reimbursements. Payment processors like Venmo or Cash App sometimes mix personal payments and sales. So annotate each deposit with a note, sale, refund, or friend transfer, and keep corroborating screenshots or messages. If you use multiple platforms, make a consolidated worksheet for the year. Once you have gross receipts, you need to decide taxable versus non-taxable items and compute net profit. And yes, self-employment tax applies to net profit if you're operating as a sole proprietor. Now the money part, calculating how much you owe and paying quarterly estimated taxes if necessary, IRS Publication 505 and Form 1040 ES are the official guides here. If your withholding and credits won't cover your tax liability, you're required to make quarterly estimated payments. A common rule of thumb is to set aside 25 to 30% of gross side gig receipts for federal income and self-employment taxes. But the more precise approach is to compute net profit gross receipts minus allowable business expenses, then calculate income tax at your marginal rate and add self-employment tax. For reference, self-employment tax in recent years has been about 15.3% of net self-employment income, which breaks down to roughly 12.4% for Social Security, up to the wage base, and 2.9% for Medicare. You can deduct half of the self-employment tax as an adjustment to income. You don't need a 1099 to use. Form 1040ES. Use your worksheet to estimate taxable income and apply your expected tax rate. If you missed a quarter or underpaid, the IRS has safe harbor rules that might reduce penalties. Check Publication 505 or talk to a pro. What if a payer legally should have issued a 1099 NEC but didn't, or they sent an incorrect form? First, document outreach. Save emails, texts, and certified mail receipts showing you asked for a corrected form. Keep copies of any W-9 seconds you provided. If they don't fix it, report the correct amount on your tax return. If the discrepancy is significant, attach an explanation or be ready to explain it if audited. The IRS expects taxpayers to report the right amount even if the payer didn't comply. If the missing form was for non-employee compensation, the IRS may follow up with the payer, but that doesn't change your reporting responsibility. And if a platform reports cash that was actually a personal transfer, you'll need your records, annotated bank statements, and screenshots to prove it wasn't income. Documentation wins these cases. Let's get practical about audit-proof documentation. Real examples you can implement right now include sequential invoices with invoice numbers, dates, payer name, and amount. Keep contemporaneous mileage logs with date, purpose, starting and ending odometer, and miles driven, either with an app or a simple spreadsheet. Keep bank statements with highlighted deposits and annotations linking them to invoices. Save screenshots of platform confirmations and messages where buyers confirm purchases. Keep photos of sold items with timestamps and listing IDs for marketplaces. Maintain contracts or engagement letters showing scope and payment terms. Keep these records for at least 3 years, but remember to keep 6 years if you omitted more than 25% of gross income. Employment tax records should be kept at least 4 years. The more you document now, the easier your life if the IRS asks questions later. A quick note about the messiness of 1099K thresholds, platform policies, and state taxes. The threshold rules changed a lot from 2023 to 2025. You might remember guidance planning lower thresholds and later legislation restoring higher thresholds for certain years. What this means in practice is that platforms and the IRS may or may not send 1099Ks for 2025, depending on the law and guidance that apply. Verify the threshold for the tax year you're filing, and check platform year-end reporting and their FAQs, because some platforms report more conservatively regardless of thresholds. Also remember state taxes. Some states require estimated payments or have different thresholds. If you have multi-state exposure, consult a pro. And if your side hustle is approaching a threshold reported in headlines, double check whether that threshold applies to the year you're filing. Quick recap. Missing a 1099 doesn't mean missing tax. Step 1. Keep contemporaneous records, invoices, bank and platform statements, mileage logs. Step 2. Reconcile monthly and create a consolidated gross receipts worksheet. Step 3. Compute net income and use Publication 505 and Form 1040ES to estimate and pay taxes set aside roughly 25 to 30% as a safety buffer. Step 4. Document outreach to payers for corrections and keep audit-ready evidence for 3 to 6 years. And always verify the 1099K rules and platform policies for the year you're filing. If you found this helpful, like and subscribe. I post real tactics every week to help W-2 earners with side hustles stay tax safe. Want a practical next step? I put together a free walkthrough called How to Build a 6-Step Digital Bookkeeping System for Side Hustles, Phone Plus Free Apps, Audit Ready in 10 minutes a week. Links in the description. If you're dealing with a large discrepancy or complex multi-state issues, consult a licensed tax pro. Thanks for watching Tax Playbook. See you in the next one. Remember, this is educational only, not professional tax advice.